In this video, we're going to talk about Fubotv, trading under the ticker symbol FUBO, Fubo. Before today's video begins, if you like my content, please also check out my other stock analysis videos on my channel, where I also analyze about other popular stocks. Fubo has been the subject of a lot of hope and disappointments in recent months. The stock was trading around $50 in early 2021 because investors thought that the growth in subscribers and revenue was going to be sustained in the long term. We're going to come back to this as well later. The next thing we know is that Fubo, much like the entire growth stock scene, began to sell off in February, and that tendency continued all the way in May. Meanwhile, the stock has lost more than 50% of its market value, from $51 to around $16 over the course of 3 months. There was the unfavorable environment surrounding it, because the market consensus at the moment is that everything was just going to keep going down and lower than where they currently are, regardless of the fundamentals. In retrospective, there was a capital outflow from the general region of the growth stocks, EV stocks, and tech companies to other types of security during that period of time. Many shareholders decided to take profit from their trades because many titles in that region increased multifold since 2020, and since most of the capital wanted to find a niche to avoid losses to begin with, they didn't really mind or had any difficulties cashing out from those stocks. For Fubo, there was an additional difficulty. In March of 2021, a major hedge fund called Archegos defaulted, forcing the liquidation of large chunks of stocks in different companies, including a lot of shares in Fubo. That sell-off further pushed Fubo stock price down the drain. We can see that there was a large push downward from $31 to $21 during that period of time, and it was caused by Archegos' debacle. With that being said, eventually the stock touched the bottom, and that happened when the stock reached about $16.39 on May 10th. It's difficult to explain why the stock decided to jump on that specific date, but given that a large number of stocks decided to rebound from that point onward, it can only be explained by the fact that capital decided to give the company another go, just like it decided to give the entire sector or the entire region another go. They're not as massive as they were back in 2020, by the way, but at least it was in sufficient number to keep the stock afloat. For the time being, I think that most of the titles will refuse to go lower than their price back in May. The same thing applies for Fubo. The most recent developments are caused by the higher than expected revenue growth of Fubo. The company's revenue increased at a faster pace than what analysts have predicted. The reason why it dipped towards the end of the week was because Fubo proposed to do a stock offering. In other words, to increase the amount of shares outstanding. Looking forward, I think that the biggest challenge for Fubo has yet to come, since many people are still staying at home longer than under normal circumstances. The stock remains an interesting trading option, but the current price action suggests that there will be a little bit of pullbacks for the next couple of weeks, and that the short-term resistance is around $35, a price level that Fubo hasn't been able to go above since March. Looking for support levels, the chart suggests that if Fubo were to go down, it's gonna go down in a very choppy grind, which may give us opportunities to buy the shares at lower prices on the way. My recommendation is to buy around 2% worth of the portfolio in Fubo shares, and to have a price target of about $35 in the short term and around $45 in the long term. Thank you for watching. If you like my content, please also like, comment, and subscribe to my channel.